I just kind of reached the point where I thought, is this really worth it? Like, and I kind of, we're learning about the 60-40 portfolio, we're learning about the assumptions, and I felt they were incomprehensive, and I started to do my own research. So I started to look in, like, what is money? Look into the history of it, because that part of the studies weren't really covered. It was just, this is how it is. There's stocks, there's bonds, there's cash, and that's it. And I was like, well, surely there's got to be more to it than that. And I looked into gold. I looked into gold's performance since 2000. I was like, hang on a minute. In terms of like inflation-adjusted gains, you're not far off what the returns of a 60-40 portfolio would be. The money today that we use is not sound. In fact, I wouldn't even call it sound money at all. It's currency. And that's a key distinction that Mike Malone makes in this Secrets of Money series, which I highly recommend you should watch. For me, sound money is something that is finite, something that's scarce. It doesn't have to be...
I can think of one thing.
Completely, yeah, well, we're going to get to that. There's a lagging effect. When the money supply increases, which it is doing, the inflation takes a while to unleash itself. And especially when interest rate cuts happen again, the money supply, people will be more inclined to borrow at lower interest rates. That should have an increase in the money supply, and inflation will return again.
Welcome to the Manx Fintech podcast, where we unravel the fabric of fintech right here in the Isle of Man, bringing to light the innovations happen just around the corner from you. With me today is Ted Butler, and we're having a look at a contrarian investment perspective. So firstly, Ted, could you just start off by telling people what is a contrarian investment perspective?
Yeah, so contrarian's usually associated with seeking value as opposed to momentum. Right now we live in a speculative environment where a lot of the gains that people are chasing are momentum based.
Yeah.
Nvidia, Bitcoin, which we'll get to. And I believe that looking where the undervalued assets are is a better way to go about things.
Okay, fantastic. So firstly, before we get into that a little more, we'll start where we usually do, which is the education.
Yeah.
So for those of you who don't know, me and Ted actually studied together for 3.5 years.
Yeah.
So tell us a little bit about the undergrad. What did we study and how did you find Liverpool? Interestingly enough, actually, 3 of the 4 guests so far have actually been in the University of Liverpool, which is by no means meant to happen, but
Yeah, so we both did international business. I think it was a worthwhile course in that sense. Like, we got things from it. There were a big prevalence of theories, which some of us got more value from than others. But in terms of like the transferable skills that we developed, whether it be writing, just articulating yourself, interpreting data.
Mr. Andrew Smith as well.
Of course, yeah. Shout out, there were some great lecturers, and I don't want to poo-poo uni completely. I think like there is merit to it, and to be honest, for most jobs today, you need a degree, unfortunately. So you have to kind of, if you want to get to that upper echelon of career success, kind of have to go for a uni degree.
It's like, do you do corporate governance?
I did do corporate governance, yeah, but I don't really remember much from.
I just remember, when we were going through all the different, because the UK have this code where you need to assess whether you're compliant or not. And I just remember going through all the board members of these companies and realizing, masters.
Yeah.
And it was that point I was like, oh, maybe I need one as well.
Yeah.
But so moving forward, I want to understand a little bit more about the postgrad. That's, obviously you came to me the day that you dropped out. So could you tell us a little bit about, what led you to that moment? And, what were the decisions behind that as well?
Yeah, so basically, we both graduated from the international business degree, so we got something in the books.
Right.
And then I think we were both kind of discussing different routes. You were always much more interested in the fintech side of things, the crypto side of things. And I remember speaking to you and talking about metals, and I was talking about specifically gold and silver. Something that is a real asset, something that's tangible. I've always gravitated towards that. But before that, I actually just wanted to be a financial advisor. So that was my intention. I've seen the effects that money mismanagement can have in families, and I was inspired to kind of be a financial advisor. But I did my master's in finance and investment management for 3 months in the September to December. There were some useful things in it. We learned about the dot-com bubble. We learned about the effects of irrational exuberance, the consequences of gambling in the stock market, basically.
So much quant though. That was the thing. Or whenever we spoke, I just remember.
Well, yours more so.
I don't even think, because my first modules was like Introduction to Python Programming. It was quantitative maths, to be fair, but in no way, when we were chatting, some of the stuff you were doing, I was like, thank God.
Yeah, but then I just kind of reached the point where I thought, is this really worth it? Like, and I kind of, we're learning about the 60-40 portfolio, we're learning about the assumptions, and I felt they were incomprehensive, and I started to do my own research. So I started to look in, like, what is money? Look into the history of it, because that part of the studies weren't really covered. It was just, this is how it is. There's stocks, there's bonds, there's cash, and that's it. And I was like, well, surely there's got to be more to it than that. And I looked into gold. I looked into gold's performance since 2000. I was like, hang on a minute. In terms of like inflation-adjusted gains, you're not far off what the returns of a 60-40 portfolio would be.
We kind of had a chat about that yesterday as well, in terms of, we think, well, actually, is the cost of goods really going up, or is our currency actually just buying less?
Well, this was the main thing for me, and I always say this. My red pill moment was a series called the Secrets of Money series.
So this is the nail in the coffin moment.
This was the catalyst for my dropout, basically. And it looked into, and it demonstrates in this 10-part series, about how the purchasing power of fiat currencies always go to zero throughout history, whether it's the Roman Empire, the Greek Empire, the British.
Not the Byzantine Empire.
That's exactly.
That was different. And then there was another really interesting one I come across, which was the dinar, with this Islamic currency that's held its value for hundreds of years.
Yeah, but if you look through history, what we observe is this kind of when governments become and central banks, or whatever the equivalent at the time, become ill-disciplined, and they don't have a physical, tangible asset to hold them to account that's limited in supply. What we observe is, we go from gold to silver to copper. I mean, when they used to walk through the temples in history, you would walk and you would get the gold coin would get chipped and put off into a bin or whatever.
Really?
Yeah. And so debasement of currency has always been a constant throughout history. And it's just happening in a different way today. Yeah. It's happening through the printing press. But that was the big revelation for me, is that the value of when you see the gold price going up, it's not actually necessarily gold, because it's the mine production is relatively constant, maybe 2-3% increases a year. It's the value of the dollar going down against gold.
And I think it's in terms of the way the media reports it, I think, it's so one-sided sometimes that, if it's just kind of a passing moment, that's what you think, and that's what you then go out to project in your spending and everything else. But actually, I think that key part that you just said is something I think more people need to be aware of and understand, because, it's like, before we get into why did you come to the Isle of Man, one of the first things you told me is I want to go somewhere where I get more value for my money.
Yeah.
Especially in a period where inflation is eroding store of value.
Yeah.
Like, my experience in Salvador is interesting because, there it was so cheap compared to the UK, but then everybody coming from Central America was like, it's so expensive here.
I mean, you only have to look at the demographic, kind of the change in the relationships in the household. In the 50s and 60s, it was the man, and that was enough. His wage was enough to sustain the family. Yes, we had this movement towards equality throughout the 80s and 90s, and we saw, but really it was the reason why the woman was working was because she had to support the household, because the disparity between real incomes and the house prices, for example, was already starting to widen. You fast forward today, you've got kids living at home with their parents for the most part, because they can't afford to buy their own house. They can't afford to get on the housing ladder. But this is going to, like a crocodile, Joe, this is going to widen even further.
Even for us, like for those who don't know as well, me and Ted live together now as well. It's like, I can't see myself buying a house in, 10 years minimum, even longer than that, probably. I mean, for our generation, look around the people we live with as well. Like when I can't see any of us having a house in the next 10 years.
Yeah.
But then you look back to our parents' generation, and that's when, I bought my house for 17,000. Now it's worth,
This is where it really bugs me, that kind of like, I don't mean to, trigger any boomers, but when they say, no, you don't understand, back in my day, it was hard. It's never been harder in terms of getting on the housing ladder now. And it's increasingly becoming that way because of the disparity between real incomes and house prices. And you look at the commodification of housing in itself, like, that pushes up the house prices. There's just, the concentration of wealth, like ultra rich own multiple houses and they could just sell them. I'm not saying that's a wrong. I'm a libertarian. I believe in like capitalism and that should be a real thing to do. But I don't think it's helping with that disparity. If you see what I mean. So.
And that's one of the things you are increasingly seeing as well. It's that increasing, growing wealth disparity between households.
Yeah.
It's like
it's the hollowing out the middle class, isn't it?
WTF happened in 1971. Have you seen that site?
Which one is that?
The one where I can't remember well, it's called WTF Happened in 1971.
Okay.
But it's all the charts linked to like when God was debased.
Oh, you mean that moment?
Increasing real wages of owners, CEOs, decreasing real wages of employees, and the disparity that's moved between that since.
Well, that's almost the biggest blunder in monetary history in 1971. Nixon.
We will get onto that. We will get onto that. So now going to self-employed, one of the kind of recurring themes of this of the show is I want to understand, how did you first start out, and what can you tell to other people thinking of going out by themselves? Because one of the themes is, if you think you can do something, especially at a young age, go out and do it.
Mm-hmm.
Go self-employed and just go banging on doors and start asking some questions. The route that people have to take is not the one that is first presented to them at school. You don't have to go work for someone. So, taking that into mind, can you explain a little bit about your role as an independent analyst and how you first started out?
Sure. Well, before I even became an independent analyst, I did try to work in the 9 to 5. It was very short-lived. So I worked one day in a debt management company, thinking it would be doing something altruistic, something that would make me feel good, because you're helping people get out of debt. The issue with the incentive structure there is that the higher the amount of debt the person is in, the more money the debt management company makes, because they take fees off the amount of debt. So that, for me, is not necessarily helping the structural problem, which, by being part of that company, you're facilitating the continuation of a debt trajectory that, just like the national governments, extends to the people. We're in a debt world. But back to the point, I just couldn't be chained to a desk, and I don't like, to be honest, being micromanaged. I like to have independence, hence the name. And I just basically, my objective is to tell the truth about what I see going on in the world, just to observe what's happening. I think at the current time, we've got lots of varying biases in mainstream media. So, with me, I will always try and say what I believe. And that extends itself to the various publications that I write for.
So what kind of representations of your own belief do you write? Where can we find some of your content? What have you been writing for, and who have you been writing for?
Yeah, so basically after that, after I quit that debt management company after one day, I started to go on LinkedIn, which I basically feel is the yellow pages of the modern world.
Again, one of the recurring themes. If you've watched this for the full time and haven't downloaded LinkedIn yet, I'd be very surprised. So yeah, a little bit more about.
You should get a brand deal.
Trying to get that premium.
No, so yeah, for me it was very, very instrumental. I reached out to maybe hundreds of people in the space of gold
and
and silver.
It is quantity, not quality.
It's quantity. You almost got to spray and pray.
Yeah.
But ultimately, all it takes is one or two, and that's what happens. So David Morgan, who's based in the US. He's been writing a newsletter that's broadly about the natural resource industry and mining for the last 25 years. But we very much aligned in terms of our beliefs about sound money, about gold and silver, and their need to belong in a portfolio.
And of course, you just released David Morgan just released the In Gold We Trust report as well.
Yeah, well, so that's my other guy, Ronnie Stoffler. He's based in Austria, so this is the second guy I reached out to. And he's another Austrian economist, so very much of the same school of thought, sound money. Against the printing press being on, overload all the time. And apart from that, so I write for more broadly about commodities as well. I like to say I write at the intersection of macroeconomics, geopolitics, and commodities, and write all about stuff like West Africa, the presence of the BRICS and China gaining a stronghold.
Now, the BRIC is an interesting thing.
Yeah.
Because that kind of runs through from university to us, from who we mentioned at the start, Mr. Andrew Smith.
Yeah.
So it's interesting to see, although we talk about university, I'd personally think in both of us, there's key elements that we have taken with us where we've gone so far in our brief journey.
Yeah.
So far, even from learning about Jim O'Neill's BRIC thesis. So how would you say, how you first learnt about the BRIC thesis in Andrew Smith's lesson, to your perspective now? Where are we with the BRICS, and what are you looking out for this year with that?
Yeah, I mean, you've got to view it through the lens that US hegemony is on its last legs. But I guess the university perspective gave me a good basis to understand the future things. And my view that the BRICS are kind of becoming more dominant has consolidated since doing more research. Because if you look in the foreign reserves of the US, not of the US, the foreign reserve holdings of the US dollar, it's gone from about 71% to below 60% last sort of 10, 15 years. So it's happening slowly, this theme of de-dollarization, but it is certainly happening. And all empires fall. As the British Empire fell, it's still
it'd be an
somewhat
interesting one
intact.
to see what Argentina does as well, because obviously
Absolutely.
Will Air was
Yeah.
talking about going. Well, he wanted to go dollarized, didn't
Well,
he?
this is it, and this is where there are pockets of dollarization potentially that could strengthen the US dollar over the long term. But what we're observing, and another reason to be extremely bullish on gold right now, which is currently all-time highs, is the fact that the likes of Russia and China have a desire for a neutral monetary asset, a reserve currency that provides them with independence. Why? Because if you look back to 2022, just on the brink of the Russia-Ukraine war, the US froze about 300 billion of US dollars of Russia's assets.
Is actually a current use.
So basically, one of the reasons why the US dollar could be dropped further is because of its ability to be weaponized by the US government.
Now, this is an interesting, the weaponization of the dollar. This was something that I really hadn't thought about, but it is an economic weapon. Like, people think we have been out of war since World War II. But in actuality, an economic warfare and technological warfare in terms of hacking as well has been so rampant the last few years. And it's just kind of been, because it's not what usually you're accustomed to in terms of understanding textbook war, it doesn't mean it isn't.
But this is the thing that I wanted to add. So if you look at Russia's foreign currency reserves, about 26% are now gold. In China, it's about 4%.
So everybody talks about...
However, relative to the amount that the gold that they bought, it's so huge. 17 consecutive months of increase in gold purchases.
And then I think the Italian Unibank has just had $394 million froze by Russia, and then likewise, I think a German bank has frozen $300 million.
This is it, and the more we continue to live in this kind of geopolitically fragmented world, the more the appetite for an independent asset like gold increases, in my opinion. I really do believe that. And actually, what's happening, what we're seeing, I mean, the reason for the gold prices rise is much less to do with the conventional determinants. And this was the theme of the In Gold We Trust report, which was all about the new gold playbook. It's this sense that it's less to do with negative correlation between the interest rates of the Federal Reserve. And I mean, that will happen. Cutting it of the rates by the Federal Reserve will increase the opportunity cost of gold. But for the most part, the rises in the gold price of late have been down to the astronomical central bank buying coming from the East.
Now, this is something I want to get on next, but just to wrap up this section,
sure.
I want to talk a little bit about your move now from writing to podcasting. So, funnily enough, we kind of both gone along a similar way in a similar amount of time, in terms of now going to the podcasting side of things. So, could you talk to us a little bit about how, you got the gigs, the writing gigs, and now how you're thinking of branching out and growing your own brand?
Absolutely, yeah. I mean, it's a great question. I mean, in terms of how I got the writing gigs, like I say, it was just persistence through LinkedIn, but then proving consistently that you are a competent writer, that your insights are unique and differentiated. In terms of what I want to do next, I mean, there are a couple of things I can do. I could go down the mining route, continuing to serve mining companies as I'm currently doing through the Morgan Report. We're offering a service where they can access our audience in return for a fee. So I could double down on that, and I was in London last week to do that.
See one of our old classmates as well.
Yeah, that was a good time to catch up, Archie, if he's listening. So yeah, I mean, there are multiple things I can do. Obviously, just continuing to bang the drum for gold and silver. We've got IM Gold here on the Isle of Man is the principal gold dealer. So, if you want any gold, then that's the place to go on the Isle of Man. So yeah, I mean, there are multiple things I could do, but I don't want to pigeonhole myself just yet. I think I want to stay open-minded.
What about, how, because obviously now, how many podcasts have you appeared on? Not including this one.
We must be getting on for 10 now, I think.
Wow, okay. And, that was only from around, it was the Daniela Cambone interview, because you went to Canada and we were all watching the interview when we were home. We're like,
well, it was funny. Dead. Yeah. I mean, so that was my first ever interview, as you know. That was.
Could you tell? Do you know what the name of the interview was? Just so
the YouTube channel is ITM Trading. David Morgan is a very close friend of Daniela Cambone. He's the host, and she was kind enough to have me on, even though it was only short podcast. It was my first ever interview.
It's ground running.
In Toronto, and I remember watching it just cringing because you hate to watch yourself.
Yeah, you were up all night. I remember watching it. Yeah, I know. You were like, "Have you seen this comment?"
Yeah,
dead beast.
Yeah, it was just weird, because obviously it's got like 40,000 views, so it's like quite like whoa. Even though that's not a lot in the grand scheme of things, I'm no like.
That's half the population of the Isle of Man, really.
Yeah, well, yeah. Yeah, I mean, it's obviously flattering, and it was relatively well received. I think that's given me the confidence to do this more, and maybe that's something I will consider in the future. Having my own platform or being more vocal. I mean, I know there's a guy on the Isle of Man actually who's quite established. I think Neil McCoy Ward. He's covering a lot of to do with the war, keeping people informed and updated about things that they should know that they may not hear from the mainstream media. So that's always something I could consider. I think you should have him on if you can.
Yeah, that's a good one. Yeah. Actually. So now I want to get on to what your kind of core ideology is. So please explain for these lovely people, what is sound money? Yeah.
Okay. So the best way to explain that is to understand that the money today that we use is not sound. In fact, I wouldn't even call it sound money at all. It's currency. And that's a key distinction that Mike Malone makes in this Secrets of Money series, which I highly recommend you should watch. For me, sound money is something that is finite, something that's scarce. It doesn't have to be...
I can think of one thing.
Completely, yeah, well, we're going to get to that. It doesn't have to be completely limited in my view, but it has to be outside of the risk of being printed at will. And it has to be...
costly to produce.
It has to be costly to produce. Maybe, yeah. It has to have characteristics that make it independent from the imperfections and flaws of people, which is why Bitcoin, gold, and silver.
So could you talk to us a little bit about that kind of stepping hierarchy? Where in your preferential assets, let's say, where is gold, Bitcoin, silver, and why?
Yeah, so right now for me it's silver, gold, Bitcoin. Okay. The reason why silver is number one, I mean, this is kind of my biggest investment thesis, or like I say, I wrote the chapter on silver falling gold, which you can read. I'm sure you'll put a link on the screen. Silver is it's got a duality. So it's an investment metal, monetary metal. Historically, it has been used in coinage and as legal tender. Now it's not that way. It's becoming increasingly industrial. But this identity crisis is not so bad. In fact, it's a very good thing. The amount of silver used in solar panels is skyrocketing.
Now, this is one of the things I want to point out. The kind of the industrial demand for silver and where that's going with EV. Because obviously one of the things we chatted about as well was that article about the ESG and where are we. That's kind of come to the forefront of 2024. Is ESG worth it? You see all these stats at the start going, the return of investment from ESG initiatives is, next to nil. So, why are we still jamming this down people's throat? But interestingly, this huge move for EV, you see an industrial demand in places like India, where you reposted there was like 70.6 million tons imported in the start of 2024 alone. So can you just talk a little bit about this link between EV and silver and its industrial usage.
Well, let me just clarify something. So EV is important, but in terms of its share of total silver demand, it's not as big as solar. So solar is like the the 800-pound elephant in the room, as Peter Corral says. So that is the one to watch, and that is a big reason behind the 70.6 million tons. It might be million ounces actually.
Ounces, I think it is.
I think it's million ounces. Yeah, you got to be confused. But yeah, that was the main reason, because India are building a renewable energy plant that's 5 times the size of Paris.
One of the things I didn't realize as well is India was actually on a silver standard, weren't they?
Yeah,
I didn't realize.
So was China.
Yeah.
China was one of the last to go off it.
1956. Or
yeah,
something
I think that's correct. Yeah.
So one of the interesting things was highlighted in the Bitcoin Standard, Safadine Anonymous book. Yes. I did not realize how many countries really were. It was you obviously had the UK, which moved to the gold standard in 1717, and then it was this kind of industrial boom where people moved to the gold standard as the monetary system. But then there were still the laggards, and they suffered as a consequence now. So I found it very interesting that India has absolutely ramped up its importation.
Well, there's a cultural significance of silver in India, in jewelry and things like that. But the main explanation behind the huge surge in imports in February, which I believe was in that month alone.
February alone. That's all it was.
I think that was in February alone. It was more than the entire previous year of silver bullion imports. But the thing to understand with silver, much like uranium, and which has gone up hugely.
I remember you tell me about it in when was it? In February, like you should buy some.
No, it was early. It was when I came, before I even moved here. It was in Bohemian.
Yeah.
I think it was in like
Shout
November. Shout out to Bohemian. Yeah, but 4 years of consecutive supply-demand deficits. This means there's not enough silver to meet the demand. There's not enough supply. So what's happening is there's a dependence on the exchanges for the inventories held. So what's happening is industrial players are, asking for delivery from these ETFs, which is draining the ETFs and increasing increasing the silver price's sensitivity, which makes for this silver squeeze moment that we talk about. I mean, we're obviously seeing GameStop.
Roaring Kitty come back. Yeah, well, I saw something on Twitter. Somebody, I don't know if he sold his account or something.
Right. Okay.
I'm not sure if that's where it all came from, but you've seen so much stuff on Twitter come up, like he's an undercover CIA asset.
Yeah, I know. But when you talk about speculation,
they sold all that. Like, how much did they sell? It was like they sold billions of their shares, didn't they?
Yeah,
not billions.
Probably not billions. Yeah, but when you talk about speculation, you talk about value at the same time. I don't think it really gets much better than silver, and this is the thing as well. When gold leads and shows leadership in its own bull market, silver has outperformed gold 6 of the last 7 silver bull markets since 1967.
But you see, like, all these kind of examples, they're all
showing it.
GameStop, I think all these meme stocks as well. I really fundamentally in no way they should happen at all. But value is constructed in the eyes of the beholder, and I think one really interesting thing you see, which goes against the contrarian perspective, is this sense of community and just a giant middle finger to traditional finance. That's how I personally see it. It's like, yes, this random dog, which we might build an ecosystem for, can, grow in leaps and bounds beyond traditional assets. That for me, although, you can talk about, is it a good thing? Is it a bad thing? It shows that we're in this transitionary period of monetary history. That's what it shows.
Yeah. Well, really, just to speak on, we are on an unsustainable debt trajectory. The US government, I believe, is every 100 days acquiring $1 trillion of debt.
So this goes to my next question. Is Bitcoin sound money?
It's a great question. Naturally, I think with the maxis and the current kind of train of thought that is peddled by the maxis, I naturally adopt a position that is kind of an opposition force.
The devil's advocate.
I like to do that because I almost feel a responsibility to keep them in check, because I feel there is a huge they get carried away very quickly, and I think there are still risks that they are blind to in some sense. So I'll start with what I like about Bitcoin. So I like that it is limited in supply. I like that it doesn't have an owner, so to speak. It doesn't have, like with Ethereum, you've got Vitalik Buterin. And I know there's probably a use case for Ethereum, but the idea that it's determined by a person, and it's almost like a company in that sense. I like how Bitcoin is sort of neutral. It's not biased to a person's. It just
Like
is. It just
Butler
is.
said, everybody has a Swiss bank account in their pocket.
There you go. There you go.
That neutrality.
So that and obviously, in terms of the blockchain as well, the ability for it to actually be used in international transactions, it is possible. So there are so many things that could make Bitcoin good, but I'm concerned about its current trajectory. I'm concerned about the adoption by institutions.
This is one thing I wanted to talk about.
I'm concerned when I see BlackRock wading in and wrapping their arms around Bitcoin. Because it's starting to go against what the original white paper says, and I've read it multiple times. It talks about Bitcoin as a means of exchange. Really, it talks about you're not gonna like this, but it talks about as a payment system. And what my concern is that it's being pigeonholed as an investment, and in that case, it goes up against gold as a store of value. And why would you go for if you're speculating, then maybe, but if you really wanted to preserve your wealth, and this is maybe where the difference is, then I would always go for gold over a nascent sort of 15-year-old asset that's younger than me and you. I'd rather go with something that's quality and something that's proven itself. It's got a track record, time and time again. It's tangible, But that's not to say don't invest in Bitcoin. I own some Bitcoin purely because of the speculative fever, maybe. But there's a network effect as well, where by virtue of you perceive value in it, the next person perceives value in it. And obviously,
the benefits of the system scale with the users.
That's it. But if that's what it rests on, if it rests on the continued perception of value in it, then I'm not so sure. Like, I don't know. I mean, give me some reassurance.
Okay. So in my perspective, this is one thing we always kind of came across, and I said, you were always like, is Bitcoin store of value? Is it means of exchange? And to me, it's like it doesn't matter. Because how somebody uses that asset is what defines what it is. If I send you $100 of Bitcoin to pay an invoice, that's a means of payment. But then if I invest $100 and keep it there for 3 years, that's an investment. Both things are true simultaneously, but it just depends on the use case to it. And I think worldwide, this is one of the things that's painstakingly obvious. If you go to any developing country, whatever you want to term it, where there's a lack of institutions, they are using it as an alternative means. But then, I've got the data to prove that, everybody in Western countries views it as an investment. And I think they both are the same thing simultaneously. And, what we are witnessing is this sifting to real needs. We kind of, in terms of what I mean by that is, people first start applying it to the most out-the-box things. And we talked about this last week. And now, to me, where you're seeing the real transformative shift is the real use case applicability, as store of value in fiat currency, in other assets goes down, people are going to continue to shift in their own perspective to Bitcoin, whereas other people, because there's always that perspective, can Bitcoin be used every day? Yeah, well, we've got the Lightning Network as well. But it's to say, it's a battle that's still being played out. It's an infinite game. I don't think there's a winner. I don't think you could ever term it as one thing or the other, because that is far too. It doesn't capture its true transformative potential, applying it to one thing or the other.
But there is a fact that it is increasingly being viewed as an investment. I don't think that's conducive to what it should be and what the white paper says it should be. Can I tell you my other concern as well? My other concern is that Bitcoin may become a victim of its own success, in the sense that, governments have an intention to maintain power. They have an intention to centralize the currencies, because in an ideal world, they would like to see what you do and not have the transparency go through the other way. They don't really like that. That's kind of why the current system works. The blockchain would pull back the curtain to the point where we could see what they want to do.
A decentralized blockchain.
It would, and that's what we should have. I believe that's something that would be great. But I'm talking about if Bitcoin was adopted, the governments would have to want that, and I can't see them.
Well, this is de jure and de facto. de jure and de facto power.
Yeah.
You know, one of the other questions I wanted to ask, you know, within our period of growing up in our professional career, are we seeing a move away from a centralized government money system to self-custody? You know, what's your
I
perspectives on
hope we are. I
self-custody? Is
hope we are.
self-custody a good thing? You know, should
Yeah.
any random person be able to, you know, control their own seed phrases and be their own bank? Is this a good thing? You know, what happens if you know they lose it and you know they
Yeah.
lose all their savings? You know, there's all these kind of
I,
perspectives
I,
which are still being
yeah.
figured out. But I just want to understand, you know, what do you think about self-custody? Is it a fundamental right? And where do you see this right moving forward in the next
Yeah.
couple of years?
Yeah, I mean, I think in an ideal world, that's how things would work, in the sense that we are not exposed to the counterparty risks of the banking system or the government or whatever. But my concern is that you have this headwind on the other side of the central bank digital currencies, where they want to control, that they almost want to go against self-custody. You know, where they want to be able to, you know, they could actually have the ability, in the interests of monetary stability, to say, you need to spend now, or you can't spend now because of inflation or whatever. Like, you know, and that's my concern. Like, I hope something like Bitcoin can help us to avoid a scenario like that, and I hope it's not too late already
Well,
for that to happen.
I think it's choice, you know,
Yeah.
because one of the things I became really fascinated with and what brought me to El Salvador is I wanted to, what does it look like? You know, you have 2.4 million competing cryptocurrencies now. What does that look like in a financial system? You know, how are people going to transact with that every day? If we have our way and, you know, we get, you know, everyone's using it, what does it look like?
Yeah.
So what I mean by that is, what do you think the monetary system for us is going to look like? Are we going to have multiple different means of payment that people can use? Or are we still, in the next 10 years, only going to have one form of government money in our respective economy? You know, what do you kind of see for that?
Yeah, great question. I think it depends on the reaction of people. It depends whether we can build awareness about the dangers of a CBDC before it happens. It depends whether people wake up to it, because it's actually a very terrifying thought, actually.
I'm actually not, I don't know, with CBDCs, focusing on it from the kind of reduced transaction cost, increased efficiency, improved user experience, I think it's great. I think, you know, like with, it's a tool, you know, a tool can be used to do good things by a bad person and bad things by a good person.
But if it's still based on the premise that they can print this CBDC or create more digits on screen, then it's fundamentally flawed and failure.
That is because, you know, one of the things going back to the sound money is, you know, if we can debase, you know, our monetary system.
Yeah.
You know,
until the supply of money becomes limited, or fiat currency, I will always hold wealth outside of the system that will store its value better. That's just the way it will be. So, because I understand history, monetary history. And
going forward, just a quick, I think monetary history is really important. So could you just give a few books, maybe a few sources for people to go have a look at? So
one of the main ones that I liked was called The Natural Order of Money, by a guy called Roy Seabag.
Would you throw Why Nations Fail in there by Ismail Glue?
I've still not read that. That was an old university book that I never read, so I should probably read that. You've got it, haven't you?
Of course.
I'll have to borrow that. I think the BRICS one would be a good one.
Jim O'Neill's one.
Yeah, I think that's probably one that I actually did read, and I would probably be inclined to read again, actually. The main resource that I would recommend is the Secrets of Money series by Mike Malone. That's probably the most comprehensive overview of why currencies fail. You know, he goes to Egypt. He shows everything. Yeah, you should watch it, honestly.
Wow, okay. Yeah.
He talked about the Roman Empire, and he's still going, actually. I mean, there's also, you know, David Morgan, Ronnie Stoffler, my mentors. They have documentaries where they talk about gold. I think it's just called the Gold Documentary. And there's also one called the Four Horsemen documentary with David Morgan.
So going back to one of the things that, just to test you and your own knowledge. So could you explain a little bit about, you know, let's talk about sound money in the Roman times. You know, obviously from the start of the Roman Empire to the Holy Roman Empire, you know, they witnessed a story not too dissimilar from what is happening today. Could you just explain that and why that is so? You know, what happened in terms of the emperors debasing their currency and how that ultimately probably led to its demise?
Yeah. Well, I'd have to do a bit more research to give the full comprehensive view, but what I do know is that a lot of it was a result of financing wars that caused them, much like we
And
have,
they, as
we
you
have
said, they
today.
were literally just clipping
They just clip it off.
off.
And we're in exactly the same position today where we need to finance wars. We don't need to. You know, I wish we didn't. But you look what the US government is doing, and you look at I'd much rather talk about today because it's more relevant. You look about the Ukraine war, the war in the Middle East, potential war with Taiwan.
I personally think that
in China.
I think because one of the next questions is about the end of US dollar hegemony.
This is it. But basically, this is it. And what's going to be happening is the US government's going to be printing so much money. And bear in mind, its interest rates are still high at 5%. I think I'm correct with this, that the cost of servicing the debt is the US government's most expensive outlay. It might not be that. It might be military, but it's certainly up there.
Yeah. I do remember you running downstairs the other week and saying
this is not sustainable.
No.
And so what will happen, and this plays into gold's hands, is rates will have to be cut. I think there will be one cut this year, interest rates by the Federal Reserve, and that will just exacerbate the appetite for gold because the opportunity cost of holding bonds when the rates are cut will be so much less. And then that will add already to what's a huge structural trend in the Chinese buying, which is happening because they want independence from the dollar itself. Do you understand? So it's all chips are being played. They've been placed on the US dollar for so long, and now they're starting to be withdrawn and allocated to neutral assets like gold. And this is why this trend is not going away anytime soon. I mean, the gold price, people seem to think, seasonally, there's this period called the summer doldrums, which is where gold and silver tend to kind of stagnate through the summer. But, with the prevalence of the structural trends that are there, I wouldn't be surprised. I mean, I believe that gold will be 2,600, 700 by the end of this year.
And just say this is not financial advice.
Not financial advice, no.
I think you have to throw those disclaimers in, don't you?
No, I mean, I'm just saying my 2 cents. I'm always going to be honest and truthful, say what I believe. I'm not naive enough to think that I'll always be right, but I think it's important to put your money where your mouth is. And silver's at $31 today, so it's starting to climb. And
So let's talk a little bit about geopolitics. Obviously, we talked a lot about the kind of sound monetary aspect to it. But, with the end of US dollar hegemony, what key geopolitical trends you see in which kind of moving forward that agenda? Obviously, rest in peace to the Iranian president who died last night in a helicopter. And there's been a lot of interesting things pop up over the last few weeks. So what are you looking out for in terms of geopolitics? What do you see as playing out over the next year and to feed into this kind of end of US dollar hegemony?
I mean, I've already said it, but I think it's really important about this kind of especially the Taiwan war will be a huge determinant of how far the gold price can go, basically.
Wow, okay.
And how far, because that will quicken the reduction of holdings by China of the US dollar, if you understand. Because basically, if China and the US enter a war,
China dumped about 250 million worth of US government bonds as well.
They did,
yeah.
But at the same time, they're buying gold. This is the thing, and this is almost like a warning sign. Yeah. So that's where I'm watching, because if the two biggest economies in the world go to war, and China reduce their holdings of the US dollar, which they already are doing, and continue to buy gold, that you asked me about what geopolitical pinch point I'm observing, that is it, because that would really, really quicken the pace of the de-dollarization trend that we're seeing. So there's that. There's obviously the Middle East as well. An escalation in those tensions could, result in further US dollars being sold.
Because I really think it's kind of, all these. Well, this is where you kind of get along the kind of, there's absolutely no proof in terms of, me and you looking, but yeah. Everything seems very coordinated. It's very easy in hindsight to look back from a history textbook and go, that's how it happened. But when you're actually within the moment, it's a difficult one to perhaps understand right there and then. You are in the middle of that because we are in the middle of several trends.
Mm-hmm.
We've got as the one we just talked about, and then we've also got the transformative shift of what is money as well. And then we've got so many different social trends
Yeah.
overlaying on top of all of that. So I guess, moving forward, where this battle between self-custody and government money comes out, what do you believe is important to relay to people to, get them to start doing their own research and to get them to start taking note of what's going on? Where do you see this moving in terms of, our generation? What can you recommend people to start looking out for and start getting interested in?
Yeah.
Because, one of the things as well is you constantly come across this, nobody really takes an interest. Everybody's just doing their own thing, especially at our age.
Yeah.
So how would you recommend to people to start doing their own research, and what would you tell them to look at?
Yeah, I mean, so like I mentioned all the resources before, but what I would say is it's not that hard to educate yourself. Like the materials are out there, and even just from this podcast, I think I've said enough that you would understand at least the reasons to have some kind of exposure to gold, silver, and Bitcoin. Yeah, and just do your own research. That's always the biggest takeaway. But understand that by having just stocks and bonds in a portfolio, or just even cash, or just even cash in a bank account, you are losing money when inflation takes hold, and it's going to return again. You cannot spend that amount of money as the governments did in COVID. There's a lagging effect when the money supply increases, which it is doing. The inflation takes a while to unleash itself, and especially when interest rate cuts happen again, the money supply, people will be more inclined to borrow at lower interest rates. That should have an increase in the money supply, and inflation will return again. So this is the thing. This is a cyclical thing. It's a historical pattern that is confirmed throughout history, and to not have any exposure to assets that are limited in supply, like gold, silver, Bitcoin. I mean,
well, one of the other interesting things I did realize as well is historically governments self-devalued their own currency so they could eat down the debt that they owed as well.
Yeah, this is it. I mean, although the Weimar Republic is a great study to do, Germany. In fact,
it's in between the world wars.
Yes, yeah. Crazy inflation. That wasn't too long ago.
They were trying to all the Allied nations are trying to force them to pay back, and they just that was a massive part as to why they the Germans said nationalism came back as well, wasn't it?
Mm-hmm. This is it. I mean, you just have to look at Zimbabwe. Just that's if you want to understand this concept that I'm trying to talk about of inflation of money, look at the Zimbabwean dollar, and look. It's like, it might be incorrect with this. It's like there are 500. I think it's $1 billion. Like just one note is $1 billion. It might even be more than that, because it's been debased, because it's not held its value. But the US dollar is the least dirty sheet, so it's the it's had this exorbitant privilege of being the world's reserve currency for so many years, and I feel that era is coming to an end. And what I'm seeing in terms of the foreign reserve holdings, what I'm seeing in terms of the rise of the BRICS. Yes, China has its problems. Yes, Russia has its problems. China, especially with its economy and sort of deflationary spiral. But I don't think the US can continue. Its history shows that empires fall and empires crumble eventually. And the US has had a great run, but I think it's coming to an end.
I love man.
Okay.
The Rosie I love man.
All right.
So, Ted, one thing that I'm assuming a lot of people from the Isle of Man would understand, could you just give a little bit of background to where you're from? And more importantly, what brought you to the Isle of Man?
Yeah, so I've kind of grown up around Bury, sort of Manchester area, my whole life.
I bet people were waiting for that from the start, like just to, hearing the accent and going, hang on, where's he from?
Yeah. So Gary Neville, basically. Went to Liverpool, good time there. What's your question? Do you want to know why the Isle of Man?
What brought you here? What brought you to the Isle of Man?
Yeah, I mean, obviously, like friends with you, friends with Carl, friends with all people in the house. But actually, it was just the fact that I feel that relative to places in the UK, safety is one of the lowest crime places in the UK. Sort of openness to business seems good. the tranquility of it. For the most part, I'm writing during the day, so to have something, be able to go on walks, be able to just kind of observe the nature. Yes, you kind of have to go outside of Douglas, but we went to play football last night. The drive was absolutely beautiful. So there's loads of things to benefit, but really, it's this kind of putting my roots down so that ultimately I can keep more of my money in the years to come. That's really the underlying reason for my move. I think in an age where, especially in the West, like taxes are very punishing.
You look at Canada. Canada has just risen their capital gains to something just
astronomical. But this is it. This is why it's all about trying to keep more of your money. So that's given that I can work remotely, that's my main principal aim. Whether it's being taxed less or living for a better cost of living in like South American countries or Asia or whatever. Like that's my intention is to not be restricted or weighed down by the really, really punishing tax systems in the West. And I think I would encourage a lot of people our age to reconsider, can they find a way to work remotely and then start to benefit in this way?
So that's one of the things I wanted to ask you as well. Obviously you're working over here, digital nomad style.
Yeah.
So is there any kind of key infrastructure or any kind of legislation that you feel needs to come into place to support people like you wanting to come over here? What key changes do you think need to be made so you are a common element of the island's environment?
Yeah, it's a good question. I mean, the first thing that sticks out to me would be kind of the air travels. I know they've just introduced a flight to the Channel Islands. I think that's a good idea. But to really sort of hammer home, like we are an international hub. Why could the airport in the Isle of Man not have flights to France, to Germany, to Spain? That would because one of the biggest ball aches, sorry to speak
candidly,
colloquially, is the fact that getting off the island. You have to get a boat, and the boat is nice, by the way. I got the boat to Lancaster to Heysham a few times, yeah. And it is a nice boat, a very leisurely experience. I think having those international flights will really help, and I know the Channel Islands have a few, so I don't see why I believe you can fly to Munich, to areas of France from the Channel Islands. So I don't see why could the Isle of Man not do that? I think that would be brilliant for the business.
What about contrasting it to what you used to in the UK and even Berry as well?
Yeah.
What key things do you see that still need to be created or become over here, even in terms of infrastructure or, what kind of key differences just stick out to you from the mainland over here?
Yeah. I mean, obviously there are more options on the mainland. That's not to say the quality is lower here. I mean, one of the things I actually admire, I don't mean to sound crude, but here there's, no homeless. Because there's, probably a smaller population that, you got in Manchester and London, homelessness is really bad. And I hate to see it. I hate to see it, yeah.
Right in front of you.
Obviously, you want to help these people. But on a daily basis, it's quite unsettling. I'd sound very, very insensitive there. I want to help these people. But the Isle of Man doesn't have that, or at least I've not seen it. I think it is a higher quality of life, to be honest. But in terms of options, yeah, I mean that takes time. I think the main job of the government should be to incentivize people to come here, because that's going to boost economic growth, and that's going to increase the living standards of the people who live here. But maybe instead of, I don't know, I need to educate myself more on the demographics, but instead of going for people with lots of money who are just going to park their money here, they need to go for economically active, entrepreneurial individuals. Because and I believe there are programs that I could get involved with.
But you see, this is the thing, for me, it's always been, as soon as I kind of started looking, I was like, my God, there's a lot on offer, but the visibility to it and finding that right kind of market for it is the difficulty, I think, because people, want that kind of party sphere with it as well. But that's one of the things our first guest said. You're not going to get that here. If you go down, it's just, if you're looking for a night out, and that's one of the big things. It's not.
To be honest, like I say, I got that most out of my system in Liverpool, so I didn't come here to go clubbing every night. Do you know what I mean? But like, more events like TT, could there be another event that, a different part of the year that could get
world
people
class
over?
something university would be. This is one of the things that has been talked about.
Need to specialize. It's all about comparative advantage.
There used to be a University of Liverpool Aquamarine Centre down Port Erin, which you've not been to yet.
But you always bang on about this UNESCO heritage
biosphere. UNESCO biosphere. Yeah, well, I mean, it's if you're looking at a viral resource, if we take it back to strategic management, that is the one viral resource the Isle of Man does have. It is entirely unique, and nobody in the world has it. So that is a big value.
Yeah, I think the question for governments is to really sit down and think, what makes the Isle of Man different? What's its core competency? What's special about it? How can we double down on it? And how can we encourage entrepreneurially
the world's
minded people to come here and stay here? Because I don't know whether I'm going to stay here yet.
What would make you stay here?
Well, you mentioned this grant thing. Well, what is that again?
So there's many different grants the Department of Enterprise have on offer. You have employee relocation grants, you have business improvement grants, then you also have a national insurance holiday up to £4,000 in your first year as well, just for a little promotion. Not that I've been looking at it, but they do have several different things on offer. But the issue is, it's just finding these kind of people. It's fine. It's because this is why, exactly what I want you on. You're a unique perspective in terms of, like I remember when you first ramped me up, in November, thinking, right, I'm coming over to the island. It's like, you sure?
Yeah. Are you sure? Like most people go the other way.
Yeah.
I was like, okay.
But great.
It's very contrarian of me to come over in the first place. So then you look at the capital gains tax as well. That's another one.
Yeah. Exactly.
That was another reason why I came over. Just remembering it.
So what would you recommend to anybody thinking about coming over?
Well, I mean, in what sense?
In the sense of, let's go UK counterparts. If you're having a talk with somebody you met at a conference and they asked you about the Isle of Man and they said, look, I'm thinking of moving over to the Isle of Man. What's your 2 cents on that? Yeah,
I mean, so I think if they've got a remote job or they have the ability to work on the island, then it'd be much easier to do so. If they have investments, they want to have less capital gains tax. So basically, a lot of the reasons are financial. I think that's a good thing. I think that's what the Isle of Man should double down on.
I think it's the theme of what we spoke about.
It is, and it's sad to see that they've had to up the tax, the income tax for I'd say low income or mid income earners recently.
I think mid income earners and self employed.
Yeah, so that's a bit annoying, Well, still, I think it would be mostly financially motivated, but it's not limited to that. I think there are so many other benefits. Like I say, the nature is really beautiful.
And I think increasingly as we move to a place where, geopolitics really will come to the forefront of, current agendas and issues, especially what, the mainstream. Yeah. The mainstream, what people are feeling scared about as well, because that's one of the other things. But anyway.
But that's a really good point. It's a peaceful, tranquil safe haven in a world of chaos.
Deposit box for data, for money.
This is it.
For people as well. I personally see one of the things I'd really like to see is becoming this base for, as you said, not just people who can afford the 200,000 year election cap. You're sending the wrong message out to people there. What really should be happening is taking hold of new money.
Yeah.
And or
taking hold of people with the potential to make the island money. Investing in entrepreneurs who can foster economic growth. That's really the way to do it.
And this is the thing sometimes with the grants, grants are great, but they're also inefficient because, if we're basing it off, traditional neoliberal economics, money flows to its most efficient productive capacity.
Yeah.
And, one of the things we're seeing is a lot of the businesses that get these grants, due to whatever reason, they're not here after a year. That's inefficient capital. That capital could be better spent elsewhere.
Yeah.
So there's also that aspect to it. But
that's true.
One of the main things that I want to understand and I want other people to see as well is, what do you want to accomplish whilst you're here? For this next year, what kind of activities do you want to build out whilst you're here? What are you going to continue doing? What would you like to do? And where do you see yourself?
It's a good question. I'm still going to be thinking about it, but I think the neutrality of the island would provide a good platform for me to build my own channel potentially. I think the government's, it's the longest running one in the world, I believe.
Oldest continuous.
Oldest continuous parliament. So that's
Which is up to debate, but
that's something.
yeah.
That's something to be proud of. That is a real.
I've been telling you about the Derek Winterbourne book that I've been reading, which goes all about the Isle of Man.
Yeah,
So
that's
I've been
very
whipping out some of
interesting.
these random facts.
Yeah. But in terms of what I want to accomplish, I think just to continue making people aware of the flaws with the current monetary system, the unsustainability of it, and the importance of owning alternative assets that are outside of the realms of what financial advisors advocate for. Just to question narratives of what we are told about money, what we are, the questions that we may not even know we should ask. Educate yourself, look into the history of money, watch the series that I suggest, and just stay aware of what's going on. That, there are biases out there, and, do your own research. Yeah.
Fantastic, Ted. Well, let me be the first to say that I wish you the best next year. I'm really looking forward to developing both our careers out. Thank you very much for coming on. And to the people listening, thank you very much. This has been the Manx Fintech podcast.